Thinking of exiting your business or taking on a private equity partner to help you grow faster? BizNexus has you covered. Tap into our network of thousands of best-fit investors, acquirers, and proven M&A advisors, and we'll help you begin the relationship confidentially on your terms, your timeline. Learn more at biznexus.com.
Disclaimer from the always present legal team. Podcast conversations don't necessarily reflect the views of BizNexus Incorporated. Everything you hear is informational news and updates from around the industry. We're not recommending any investments. We're not offering any investment advice. Be sure to do your own homework.
All right, so today we're taking a deep dive into a corner of real estate that doesn't always get the spotlight, the lower middle market.
Yeah, it's kind of like the hidden gem of real estate investing.
Exactly. And to guide us through this, we're looking at Argosy Real Estate Partners.
They've really carved out a niche for themselves in this space.
They have. We've got a Q&A with their co-CEOs, David Butler and Andy Stewart, so we're getting some firsthand insights.
And right off the bat, one thing that jumps out is the amount of capital Argosy has under management.
It's significant, right?
Almost $4 billion, with a lot of it focused on this lower middle market.
That tells you they're not just dabbling. They really believe in this strategy.
Exactly.
But before we go any further, maybe we should define what we're actually talking about here.
Sure.
What exactly is the lower middle market in real estate?
It's a good question, because it can be a little bit fuzzy, right?
Yeah.
But think of it as the space between those mega deals you always hear about.
Right.
You know, the ones that make headlines?
Yeah.
And the smaller properties, that individual investors usually go for.
The mom and pop type investments.
Exactly. And Argosy's co-CEOs, they point out that this is where you often find less competition.
Okay, so less of a feeding frenzy.
Yeah, and that can mean bigger potential returns.
Oh, I like the sound of that. So more room to maneuver.
Exactly.
Now, Argosy doesn't just wander around this market aimlessly. They've got a very defined investment philosophy, right?
They do, yeah.
5 core principles. And it strikes me that these aren't just, buzzwords they throw around. They seem to really guide their actions.
Right. It's not just talk, it's how they actually operate.
Yeah. So let's dig into these principles a bit. What's the first one?
The first one is acquiring assets at a competitive cost basis.
Okay. What does that mean in plain English?
Basically, it means being disciplined about not overpaying for a property.
Even in a hot market.
Especially in a hot market, they're looking for value, which can be tougher to find in the more popular sectors of real estate.
So it's kind of like being patient and waiting for the right deal to come along.
Yeah, not getting caught up in the hype.
That makes sense. What's the next principle?
Downside protection.
Okay, so not just chasing the highest possible return, but also thinking about how to minimize losses if things go wrong.
Exactly. They're not just thinking about the upside, but also what could happen if the market takes a downturn.
It's like having a safety net, so even if the market stumbles, their investments are more likely to hold their ground.
Yeah, exactly. They're thinking defensively.
I like that. What else? What's the next principle?
Creating value at the asset level.
Okay, so this isn't just about being a passive investor. It's about actively improving the properties they acquire.
Yeah, you got it. And that could mean anything from renovations to repositioning a property for a new use or even ground-up development.
So they're rolling up their sleeves and making the asset work harder, so to speak.
Exactly. And it's not just about aesthetics. It's about making the property more functional, more desirable to tenants, and ultimately more valuable.
So creating real, tangible value that translates into higher rents or better sale price down the line.
Right. They're thinking long-term.
And I see they also talk about having multiple exit strategies.
Oh, yeah, that's important.
So they're already thinking about how they're going to get out of an investment before they even get in.
It's like having a plan B and maybe even a plan C.
Smart planning. That ties back into their focus on downside protection, doesn't it?
Absolutely.
Now, this detail really caught my eye. Argosy is typically the largest investor in their own funds.
Oh, yeah, that's a big one.
They're not just asking investors to take the risk, they're right there on the front lines with them.
They're putting their money where their mouth is. It shows they really believe in what they're doing.
Okay, so we've got a good handle on their philosophy, but how do they actually find these hidden gem deals in the lower middle market?
Well, they talk a lot about building relationships with operating partners across the U.S.
Is that the secret sauce?
I think it's a huge part of it, yeah.
So these operating partners are like their boots on the ground.
Exactly. They're the local experts who have deep knowledge of specific markets.
And often have access to deals that never even hit the open market.
Exactly. That's the key.
So it's like having this network of insiders feeding them exclusive opportunities.
It gives them a real advantage over investors who are just, looking at public listings.
Right. So it's not just about having capital. It's about having the right connections.
And the right approach. Argosy's co-CEOs, they really emphasize that their operating partners aren't just transaction-driven.
Okay.
They're long-term partners who share their investment philosophy and approach.
So it's about trust. It's about shared values.
It is, yeah.
Not just finding somebody who can point them to a property.
Exactly.
This approach seems very different from, just scouring online listings or attending those big real estate conferences.
Right. It's more about relationships and really understanding those local markets.
That's fascinating. But their co-CEOs also say their nationwide presence, combined with their, relatively smaller size, gives them an edge.
That's interesting, isn't it?
How so? How does that work?
Think about it. Those larger institutions to be pretty slow-moving.
Yeah.
Bureaucratic.
Lots of red tape.
Argosy, they're more nimble.
Okay.
They can react quickly to opportunities, make decisions faster, and be more flexible in how they structure deals.
I see. So they're more adaptable to changing market conditions.
Exactly. And in the lower middle market where things can change pretty quickly, that can be a real advantage.
Okay, let's talk about their diversified allocator fund model. What is that?
All right, well, imagine you want to invest in real estate, but you don't want to put all your eggs in one basket.
Right, diversification.
You want to spread your risk across different property types, different geographic locations.
Makes sense.
But managing all those individual investments can be a real headache.
A lot of paperwork.
Right, that's where this model comes in. Argosy bundles a whole bunch of these lower middle market deals into a single fund.
So you, as the investor, get exposure to a wider range of properties without the hassle of managing each one individually.
Exactly. You get the diversification without the headache.
That sounds pretty appealing.
And Argosy, they argue this model is particularly well suited to the lower middle market because the deals are often smaller and more spread out.
So it would be tough for an individual investor to build this kind of diversified portfolio on their own.
Right. It would take a lot of time, effort, and expertise.
Okay. So they're kind of like creating a curated collection of these hidden gem investments.
Yeah, I like that. They're doing the legwork for you.
So we've got a good sense of their overall approach, but within this model, they're targeting specific niche strategies, right?
They are, yeah.
What are some of those?
Well, first they're looking at what they call transitional assets.
Transitional assets?
Yeah. These are properties that are in the process of changing, either physically or in terms of their use.
So like an old office building that's being converted into apartments.
Exactly. Or a retail center that's being repurposed for, say, e-commerce logistics.
So they're seeing potential where others might see a problem.
That's a good way to put it. And they believe these types of opportunities are particularly abundant in the lower middle market.
Why is that?
Well, larger investors, they might not have the flexibility or the patience to tackle these kinds of projects.
They're looking for something a little bit more straightforward, maybe.
Right, something that's already stabilized.
Okay. What else are they targeting?
They're also pursuing smaller investments.
The kind that might fly under the radar of bigger firms.
Exactly, the deals that are too small to move the needle for those giant institutional investors.
Okay. And what about emerging sectors? Are they looking at any of those?
Oh, definitely. That's a big focus for them.
Like what?
Anything from self-storage to senior housing to, data centers.
So they're trying to anticipate where the market is going, not just where it's been.
Right, they're looking for the next big thing.
That makes sense, but, the market has been a bit volatile lately, hasn't it?
Yeah, for sure. It's been a roller coaster ride.
How are they navigating that?
Well, one of the things that makes Argosy interesting is they're not afraid to be contrarian.
Contrarian.
Yeah, they see opportunity where others see risk.
Interesting.
So specifically, they're looking at distressed assets.
Distressed assets.
Yeah, properties that have been negatively impacted by rising interest rates or, economic uncertainty.
So they're like the bargain hunters.
Exactly. They're looking for deals when everyone else is heading for the exits.
Bold move. Okay, so we've covered a lot of ground.
Yeah, we have.
We've got a sense of their overall philosophy.
There are specific strategies.
It's clear they've got a very deliberate and thoughtful approach to this lower middle market, but maybe we should take a break for a minute to let all of this sink in.
I think that's a good idea. We'll be right back to continue our deep dive into Argosy and the lower middle market. Welcome back. It's really interesting how Argosy has tailored their approach to the lower middle market. They're not just trying to apply a generic real estate strategy.
It's like they've found this off-the-beaten-path fishing hole
Yeah.
that everybody else is just sailing right past.
I like that analogy.
They're wheeling them in while the competition's wondering where all the fish went.
Yeah, it speaks to their focus on being adaptable
Right.
and nimble,
Yeah.
which are essential in a market segment where opportunities can be more localized
Right.
and less obvious.
It seems like their strength is finding those diamonds in the rough. The assets with that hidden potential that others might just overlook.
Exactly. They're not going after those like trophy properties, right?
Right.
They're creating value where others don't even see it.
And that's where their expertise
Yeah.
and that reliance on those operating partners
Yes.
really makes a difference.
Huge.
Because they're able to find those off-market deals that haven't been, bid up in a crazy competitive frenzy.
Right. Less competition, potentially higher returns.
Exactly. So it's not just about having the money, it's about knowing how to use it and having those right connections.
It's like the saying, it's not what you know, it's who you know.
Now, we talk a lot about their investment approach, but what about their values?
Oh, that's a great point.
Do they align with what investors are looking for today?
Well, it's not just about returns anymore, is it? It's about responsible investing. And Argosy seems to get that. They've talked about their commitment to ESG principles.
ESG.
Yeah, environmental, social, and governance. It means taking into account things like sustainability, community impact, ethical business practices.
So they're not just building a portfolio, they're building a legacy.
Right, exactly. They're thinking about the long-term impact of their investments.
It's clear that Argosy's playing the long game here. They're not interested in quick flips or those short-term gains.
They're building a platform for sustained success.
And that's got to be a compelling story for investors who are looking for a partner who shares their values
Absolutely.
and their vision.
Argosy seems to be ticking all the boxes. A clear investment philosophy, a proven track record, a deep understanding of the market,
Yeah.
and a commitment to responsible investing.
They've definitely made a case for the lower middle market, especially in today's real estate world.
For sure. So before we wrap up, was there anything else from that Argosy Q&A that really stood out to you?
One thing that resonated with me was their emphasis on patience and discipline.
Oh, yeah, they talked about that.
They said the lower middle market can be less liquid
Yeah,
than other segments of real estate,
meaning
meaning you need to be prepared to hold your investments for a longer period.
it's not a get-rich-quick scheme.
Right.
It's a long-term play, and that's something investors need to understand. The lower middle market can offer compelling returns, but it's not for the faint of heart. It takes patience, diligence, and the willingness to partner with a team that knows what they're doing.
Sounds like Argosy fits the bill.
They do, and that's a big part of why they've been so successful. They've taken the challenges of the lower middle market and turned them into opportunities.
They're thriving. All right, so let's bring it all home for our listener. What are the key takeaways here?
I think one of the biggest takeaways is that the lower middle market is a viable alternative for investors who are, maybe looking for something a bit different.
It's like discovering a hidden trail
Yeah.
that leads to this amazing view.
And Argosy has given us the guidebook to follow that trail. They've shown us that success in the lower middle market isn't about luck, it's about strategy.
Having that clear investment philosophy, that disciplined approach, and those strong relationships with those local operating partners.
Right. Those relationships are key to unlocking those off-market deals.
Yes.
And gaining a real edge.
And I love how their diversified allocator fund model gives investors a way to tap into a whole range of assets
Right.
and spread their risk.
Without having to become real estate experts themselves, it's like having a personal real estate investment team working for you.
Exactly. And let's not forget their commitment to ESG principles. They're showing that you can do well while also doing good.
It's a win-win. So what does all this mean for our listener? Well, first, don't underestimate the potential of the lower middle market.
Right.
It's a dynamic segment of real estate with a lot to offer.
It's like venturing off the beaten path. You never know what you might find.
Second, success in this market requires a different approach. Be nimble, build relationships, and really understand those local markets.
It's not just about having the money, it's about knowing how to use it wisely.
And finally, remember Argosy is just one example. There are many other firms and strategies out there.
So do your research.
Explore, ask questions, don't be afraid to think outside the box.
That's how you uncover the real opportunities. And on that note, we'll wrap up our deep dive into the lower middle market.
We hope you found it insightful
and inspiring. Until next time.
Happy investing.
Okay, so we've explored this lower middle market with Argosy.
Yeah, we've gone pretty deep.
What are the big takeaways here?
I think for me, the biggest one is that the lower middle market, it's a legitimate option for investors.
Yeah.
It's not just, some sideshow.
It's like finding that hidden trail.
Yeah. Leads you to something special.
That nobody else even knows about.
And Argosy has shown us how to find that trail, how to be successful in this market.
Yeah, they've emphasized having a clear plan.
Absolutely.
Discipline.
Understanding those local markets.
And those relationships too.
Huge, yeah.
With the operating partners. That's how they're finding those deals that haven't been, bid up by everyone else.
It's about having access,
Yeah.
not just having money.
And their fund model too.
Oh, yeah.
I really like that diversified allocator fund model. It gives investors a way to get into a wider range of properties
And it spreads the risk, right?
without having to become an expert themselves.
Exactly. You're letting Argosy do the heavy lifting.
Like having your own personal real estate team.
Yeah. And Argosy, they're in it with you. They invest in their own funds.
Shows they believe in it.
Absolutely. And, their commitment to ESG,
Yeah.
doing well while doing good,
Uh-huh.
that resonates with investors nowadays.
Yeah. So, listener, if you're out there, what should you be thinking about?
Well, first, don't write off the lower middle market.
Yeah.
It's got a lot of potential. Could be the perfect fit for you.
Venture off the beaten path.
You never know, right?
Second, success in this market, it takes a different mindset.
Be nimble, build those relationships, really understand those local markets.
It's not just about the money. It's about knowing how to use it.
And lastly, Argosy, they're just one example. There are other firms, other strategies out there. So keep exploring, keep asking questions.
Do your own research.
That's how you discover those real gems.
Well, that wraps up our deep dive into the lower middle market.
Thanks for joining us.
Hope you enjoyed the exploration. Until next time, happy investing.
Acquiring a business? BizNexus simplifies it. Access thousands of updated opportunities in our DIY marketplace or supercharge team sourcing with OmniSource, your all-in-one platform for on-market, off-market, and coming-soon deals. Scale smarter today. Learn more or book a demo at www.biznexus.com.